Hello, fellow traders. 'Tis I, the Rumpled One. What trading is and isn't. I'm reading a book. It's called 4 Seconds by Peter Bregman. And I came across something that I'd like to share because it's kind of interesting when you really think about it. You know, what trading is versus what trading isn't. So this comes from page 236, and it's in the conclusion. For something to be a great success, it doesn't have to last forever. The challenge, not thinking of any solution as a cure-all in the first place. When we think of something as a panacea, we ignore its weaknesses and negative side effects, and eventually, when the inevitable flaws are exposed, we lose faith in the solution completely. We discount any value it provided because it never lived up to our expectations. It never fully worked. And then we go off in search of the next magic bullet. Our yearning for the solution, the formula that will solve all our problems, the panacea to our angst is strong. It is also misguided because nothing is perfect and nothing lasts forever. So we're better off seeing every solution as temporary and every tool as potentially valuable and probably fleeting. That's true whether the change is personal, like a new diet, or organizational, like a new management tool, a new organizational structure, or a new diversity program. Seeing every solution as temporary yields surprising dividends. So it goes on from there, but the point is, when you think about it, you get a new indicator or a new system and it works for a while, and then you get burned, and then you go off searching for the next holy grail. I mean, who hasn't done it? I mean, I've done it. I mean, back when I was first starting out, had to learn a few things. So, got suckered into a few things like the magic MACD settings or stochastic settings. I have to laugh at myself when I think about it. And then get suckered into things like believing in multiple time frames, and then I have to laugh at that because price is the same no matter what the time frame or chart period is. It's not like if you change your chart time period, all of a sudden the price changes. And then there's always the lagging indicators, and so on and so on and so on. We all get suckered into it. So what we just have to realize is, in trading, trading does not offer consistency. It does not offer things that are constant, except for the fact that price moves up and down. Beyond that, all bets are off. I mean, it's speculation, it's gambling, it's risky. We try to predict the future, but we can't. There's no probabilities, only statistics. I mean, and just on and on and on. So we know what trading isn't. What is trading? When you think about it, it's really kind of simple. You're basically trying to determine the direction price is moving. And so if you're going to determine the direction, it has to be from a reference point, whether it's yesterday's close, yesterday's midpoint, where price was when you first opened up your computer and cranked up your trading program. I mean, it's always going to be a reference point. So once again, we can look at the dashboard, and I've added something. I put range on it just because. Mainly, I wanted to see if range for the day has been exhausted, or where it is in compared to the average and the max, but because of the Brexit, um, the max is pretty skewed over the past 24 days here, past 24 days. So we can see here that 1 bar ago, these guys here put in lows for the day, and here's 1 bar ago, the dollar Canadian put in a high for the day. So if we look at that, see it put in this one H1 bar ago, but I'm looking at N5 at the moment. And there's a couple of indicators that I've recently written. We've got the holo, which is the highest open, lowest open, and this multimeter, it stops at H4 because we're only looking, this is intraday. So we can see that it's above the lowest H4 open. Okay. I'm sorry. It's above the highest H4 open. It's green. And ditto for H1, ditto for M30. So I also wrote this indicator, the dynamic holo, and the one, don't get this confused with the 3-level ZZ. This is the 1 hour highest open. This is the 4 hour or H4 highest open. I could have labeled it, but I decided to use the semaphores instead. And we can see right now prices moving up in relation to this point, relation to this point. Also, we've got the candle color number indicator because it tells you how many bars in a row of that candle color. So you see right here, price just dropped on the H1. So we got one dropped on the H5 below the open, and for 1 bar in a row. So if you're thinking about buzzer reversals or doing any of the statistic trades, you know that after 3 bars in a row that the continuation is probably not as likely as a reversal. Even though it can go on for runs up to 5, 6, 7, 8, 9, 10 or more. And that's part of why I read you that. You see, somebody might be doing a buzzer reversal and they might have, 2, 3, 4 winners in a row. Then all of a sudden, they thought that, okay, we've had 3 greens in a row, time for a red. Next thing you know, you have 7 more greens in a row. So they think, oh, this thing doesn't work, and they quit. No, it still works. It's just that you have to remember, when the statistics is on your side, but that doesn't mean the next trade's going to win. It's not going to work every time. Sometimes you're just going to have to let it hit your stop loss, dust yourself off, and keep going. I mean, that's trading. That's what trading is. There's really not too much more to say about that when you think about it, because it doesn't matter what method, system you're doing. You could be flipping a coin. Sometimes it's going to work and sometimes it's not. You just have to manage the money, manage your risk. And the trend is your friend, and cut your losses, let the winners ride. You see, that goes back to what is trading. At any point in time, we say, well, we believe price is going to go up from this point. And you may be right, and you may not be right. If you're right, and you enter the trade and price starts to go in your direction, then at every point in time, you have to keep determining, is price going to continue to go up? And then at some point in time, you say, I don't think price is going to continue to go up, so I need to exit the trade and take all my pips off the table. So we're constantly asking and answering that one simple question over and over and over again. Which direction is price heading? And so that's what this indicator is about. You get the highest open and the lowest open, including the current bar. That's why I have these zeros here, because you can shift it if you want it to stay static for a while. So you see here we're 5 pips below the highest M1 open. So from M1, the highest open, we're heading down. M5, we're 2 pips below the highest open. So right here, that would be the highest open on M5. But we're 4 above M15 and 12 above M30 H1 and 40 above the H4 highest open. Here's the H4, here's the H1. So for all practical purposes, right now, price is moving up in relation to H1 and H4. And we know eventually it'll, based on statistics, it will close below the highest H1, but these numbers, as you can see here, could keep moving up throughout the day till it reaches a point where it reverses. Once again, that works most of the time, but every now and then that's not the case. Doesn't mean you throw this all out. Just means you have to realize what I just read, that there is no be all end all. There is no solution that's going to work all the time. No method, no system. Doesn't have to work all the time. Just has to work enough where you can go away with more pips than you started with. And just to bring you up to date, I've still been working on this indicator. Sometimes it works, sometimes it's got something weird in there, and I haven't quite figured it out yet. That's why I haven't released it. Maybe I should release it and one of you guys could figure it out. But you can see right now we're in the holo setup, the highest open, lowest open on the H1, and so we're looking for it to break this way eventually. And one of the things I put in here, I might have mentioned it before, the maximum lot size you can have. In other words, you can bet the bank because you can see here the risk is low. Now some people might say that's a lot of risk, but I mean you'd have to lose, if it's around 5%, you got to lose 20 in a row to wipe out your account. I don't think that this is not going to work 20 times in a row. I could be wrong, but I don't believe it. So anyway, the main point, the takeaway is to remember what trading is and what it isn't. And as always, it's not what you trade, it's how you trade it. The Rumpled One, signing off.